Hi guys, it's Mike here. The latest information is finally out. First of all, in today's market, the yield on the 10-year US Treasury note is at 3.759, the first major drop in long-term interest rates in a long time. This is of course positive for stock prices. All the indexes are up around 2%, which is a big plus for all of the market. The S&P 500 has a big positive movement. The previous low was the lowest since the beginning of the year, and it is just about to rebound from there. It is far away from the 50-day moving average, so there may be some short-term pullback. This is now the upper resistance line. After falling for 6 days in a row, the price has finally fallen below the previous low price. First, let's see if we can break through here. If so, we are now firmly on the chartered ship as well. Nasdaq is still above its last low point. According to IBD, the market is still in an adjustment phase and October will soon begin. The October is the month that saw the big crashes in 1929 and in 1987. It's an abominable month. On the other hand, there have been many cases where the market made a great continuation and reversal. In other words, it is a month when sentiment can change abruptly, and with this in mind, observe the market calmly. In October, the performance of S&P 500 was not so bad over the last 70 years. And after that, we have November, December and January, which is one of the best performing months of the year. Looking back at the actual field so far, after the crash caused by the coronavirus pandemic in 2020, there were growth of stocks, but mainly IPO stocks. When we entered this year, the market changed its opinion, focusing on energy, and then the recession happens again. It was still dangerous to go and buy stocks. But now, finally, there was a change of opinion. If you ask me if I think the US market will go down or up by the end of this year, I think it will go up. Specifically, the market has been lingeringly low since the beginning of the year, but I think it will regain at least half of that level. I think it's going to return about half the price, and the target for S&P 500 would be around 4,200. I think we can recover up to that point. In the near term, we may see a bit of sideways movement, back and forth. In other words, the stock price is not going to recover at a steady pace. I believe that it will get better gradually until the end of the year. So, now is the time to buy. The fear index right now, although it dropped quite a bit from yesterday, it went up to about 35 at one point. In other words, people are scared and timid now. There is a conflict in the market right now. The phase in the stock market when you are most likely to suffer a large loss is when everyone gets up and says, "Hey, everyone is making money, so should I." Everyone is scared right now. We don't lose a lot of money in such a situation. But I am still scared because I know a recession is coming. The little man can say something like this, but the recession is a welcome thing. First of all, please think again. The reason why the US stock market has been falling so slowly since the beginning of this year is because of interest rates. Because the Fed is raising interest rates, and the reason why the Fed is raising rates so aggressively is inflation. In other words, the source of the current market price is inflation. Inflation has forced the Fed to raise interest rates aggressively. As a result, stock valuations, which are on a seesaw relationship with the interest rates, have fallen, causing stock prices to fall. It's a textbook thing. And central banks are now desperately trying to fight off this inflation, and the Fed is doing it. The most effective thing that can kill this inflation is a recession. Because when a recession comes, prices will fall. The problem of interest rates, which is the main source of the problem right now, will disappear naturally and it will be solved. when the recession comes. So right now, the news is that bad news is good news. A recession is coming.
But winter is coming.
When people hear that on the news, they feel bad. But it's good news for investors and they buy stocks. For central banks, a hyperinflation is much scarier than a recession. I am not afraid of recession at all. We had a lot of them in the past. In other words, we know how to deal with recessions. But a hyperinflation, like the one we are experiencing right now, is the first time since 1988, and FRB is much more afraid of a hyperinflation. That's why we want a recession to come. That's why Chairman Powell is tightening his belt. Not yet, isn't it early? I think there are a lot of people who think that way. But it's about time. If there is a recession in the future, there is a risk that stocks will be bought heavily. If the next CPI report comes out with good numbers, the market could skyrocket. House prices have already seen their biggest drop in a decade. Energy prices, grain prices, and even gasoline prices have fallen recently. Prices are starting to fall for everything. I don't think it makes any sense to be bearish now. Let's all welcome the recession. But what are we rejoicing about when a recession makes more people unhappy? I know some of you may think that way, but I have actually learned from this that we investors should watch the news and refrain from risk-taking when the number of people in miserable circumstances starts to decrease, because stocks go up as the number of miserable people increases. The same thing happened during the coronavirus. The US went into recession, unemployment rose like never before. There were a lot of people suffering, a lot of miserable people. But on the other hand, stock prices rose by double digits for the 2020 and 2021. And then the economy recovered, and the number of miserable people started to decline. Rothschild also put it this way: invest when there is blood in the streets. But what do you think about tiny corporate earnings? I think corporate earnings will be bad, especially now that the dollar is strong. Large stocks like GAFA are particularly vulnerable to the strong dollar, and I think their next financial results will be a disaster. But remember, my friends, this is what we are going to do from now on. When it comes to news, bad news is a good news. Even if earnings are in tatters, it is still good news. When that happens, it's time to buy. From now on, recession should be factored as good news. When the market is exhausted of bad news as it is now, it is usually a sign that the market is about to reverse. Let's look at this bad news. Apple is said to have abandoned efforts to increase production of its iPhone 14 lineup by 6 million units in the second half of this year, after lower than expected demand. This is not a big news. Apple is now turning more and more towards services, trying to break away from its dependence on the iPhone. So I don't think the news related to the iPhone is really big news. We have to prioritize when dealing with the market. The most important thing right now is to pay attention to when prices will hit the bottom. And what we need before that is a recession. As long as a recession comes, the market will bottom out. Incidentally, this year is a midterm election year, and we have learned from the past. October, just before the midterm elections, is a buying opportunity for the stock market. So the question you all want to ask the most right now is this: if I were to buy now, what would be the best investment to make? I think VTI, Vanguard Total Stock Market Index Fund, is a good choice. Why investing in individual stock is bad? Since the financial results are in tatters, I think the next financial results will be bad too. But as I said before, if the earnings are bad, then I will be the one to buy the stocks or indexes. The depressed news is exactly what Chairman Powell wants. Once that happens, there will finally be no need to keep raising interest rates as drastically as we are seeing now. In summary, the whole month of October will be a back and forth affair, and even if we win, We may not make money immediately and comfortably, but that doesn't mean that everyone got the timing wrong. We may win, we may lose, and we may go back and forth in the immediate future, but by the end of the year, stock prices will be higher than current levels. If you liked the video and want to watch the next one, be sure to subscribe to our channel and smash that like button. If you have any questions or suggestions, post them in the comments below.